Bill Gross joins us on the phone right now. Bill, thank you so much. I mean, the accolades have been pouring in here. You're pulling back. What do you want your legacy to be?
Well, and thank you. I'd like it to be that I was an innovator along with a lot of able colleagues and assistants, but an innovator in terms of active management for bonds. You know, when I started in 71, basically bonds were kept in a vault and never traded. I think I was one of the first in terms of active management. Also at PIMCO, I was one of the first, and the team was one of the first to begin to buy mortgage bond pass-throughs, which at the time in 1975 was very risky. We were one of the first in terms of financial futures, which, as you know, dominate the market today. We went into TIPS. We went into global. Basically, my legacy, as I see it, would be one in which I was an explorer, an innovator, a risk taker willing to move into new markets that now are very well established.
Seems some people on Twitter agreeing with you about your legacy as an innovator. Mohammed Al-Arian, who you worked with at PIMCO, even said that many of his portfolio approaches and analytical frameworks continue to be used today by investors around the world. You've been in this for a long time, and it is a tough business. Do you have any regrets or anything that you think you would have done differently?
Well, comparing this to Tom Brady, who keeps on going and going, I think after I left PIMCO, I wanted to continue to demonstrate that I could outperform in an unconstrained type of portfolio. It seems like, in looking back over my 30 or 40 years, that I was a better portfolio manager being constrained, that is, being benchmarked to the total return index and being measured by minor gradations and changes in duration and so on. So I probably would have called it a day a few years ago, but being the risk taker that I am and the innovator and the person that always wants to outcompete, I went with Janus and decided to give it a go. Didn't work out that well, but it's kept me active and kept me busy, and now I'm ready for other challenges.
Hey, Bill, it's Andy Serwer here. I do want to ask you, since we have you here, to get your take on Fed policy and where you think the 10-year is going to end the year. I don't know if you're going to be doing more prognosticating going forward, so we want to make sure we get some from you here.
Okay, thank you, Andy. Well, the Fed has been the aggressive central bank by far. Fed funds at 2.5% and inflation at 2% is really a real short-term interest rate of 50 basis points. The question becomes, and the Fed doesn't know this, that's why they move gradually, and that's why they stop and pause, as Chairman Powell did a week ago. It's a legitimate question whether a 50 basis point real policy rate is just right, whether it's not too hot, not too cold. And it seems like the moment that it is, but I think ultimately that the Fed and other central banks will continue to be cautious, and that means for the 10-year, which is moving higher in yield today at 270 or so. It still seems to me a little bit overvalued. If 3-month LIBOR is at 385 and a 10-year Treasury is at 270, then you're obviously losing money by borrowing and buying the 10-year. That would depend. That scenario would depend on a deflationary type of scenario, which I don't think we and I believe is coming, nor the Fed. So I'd say the 10-year moves higher. Probably not higher than 3%. You've got to remember that the ECB and Japan and others are still stoking the fires in terms of negative interest rates. Certainly, Germany has a yield curve out to 7 years that still remains negative, and so the arbitrage potential, even though there's a currency element to it, the arbitrage potential for German investors and insurance companies and Japanese insurance companies is substantial relative to their own market. So, the Fed's behavior, the 10 years behavior, yes, it's dependent upon the strength of the economy, the creation of jobs, the inflation rate, which is now around 2%, but it's also dependent upon other central banks and what's happening in their areas. And we're talking, of course, about the Eurozone, and we're talking about Japan and other markets. So it's a delicate little dance going on here by central banks in terms of where policy rates are going and what an appropriate level is for an intermediate 10-year treasury. I think 270 is a little low. I don't think it could go higher than 3%.
Bill, Miles Upton here. I would just ask, as someone who's read, I think, all of your monthly commentary, certainly for as long as I can remember, if you'll continue writing as you move into this next phase and out of the active management business.
Yeah, I hope so. I used to, whenever I'd come up with what I considered to be a brilliant, opening paragraph or two. Others didn't, but it was usually in the shower or after working out and so on when I had the endorphins, rolling through my brain. But I stored some of these in the refrigerator, so to speak. I wrote them down, and they're packed away, and so I can do that and connect it with an ongoing assessment, like I just did of markets, and hopefully others will enjoy it. I think that's one of the legacies that I've. You asked me at the start, or I was asked, what would my legacy be? I also think, I was one of the first writers that brought the bond market and other markets to, the everyday reader. They became interested in the markets because I connected it with my personal life and opinions on life to some extent, and some thought that was a little overbearing, a little cloying, but others did not, as perhaps you just mentioned. So I like to think that I continue to do that. I'm not a Mark Twain, but I think I've got things to offer.
Certainly. Yeah, not a Mark Twain, although I think writing about Bob the cat was memorable. You got a lot of things out there.
Given the subject matter,
yeah, given the subject matter, you made it very interesting.
Right.
Thank you for being somebody also that, just in this market, came on and talked to us and to the broader market as well. Congratulations. Take some time off, but don't be a stranger. We'll definitely ping you again, and even though you're in retirement, would love to hear your thoughts. Thank you so much.